In this video, you will learn the most accurate scalping strategy on my channel I have tested so far. This method is probably something you've never seen before, so make sure you stay focused and pay close attention to all of the details. I'm going to give you a bunch of examples on how you should place trades using this strategy and also teach you a new money management trick that will instantly make you massive profits from any market. So without further ado, let's get into it. So first of all, you're going to need to open TradingView.com, open up Euro versus the US dollar and set the time frame to 5 minutes. This strategy can be used on all time frames, even including our daily chart. The next step will be to come up here and click on your indicators tab. And now we're going to need to add 3 free TradingView indicators to our chart. For the first indicator, let's search for Q trend, which is this one here. Then we're going to access our indicator settings by double clicking on it. And we're just going to be removing our trend line. This is going to be our main confirmation indicator, and based on these signals, we're going to be placing buy and sell orders. For our second indicator, we're going to come across here and search for fluid trades, which is this one here. This is a smart money concept indicator. It shows the areas of supply and demand. And then we also do have a break of structure levels. Usually when the price action is in a downtrend and reaches a demand level, the market tends to reverse. And the opposite happens when the price reaches a supply zone. Notice the price action was heading upwards, then it reached a level of resistance and started to sell off. These levels are very important because they will dramatically increase the win rate of our first confirmation indicator. And finally, to complete this setup, we need to add one more tool. This indicator is called Money Flow Index, which is this one with alerts. Okay, so we can see that the line is barely visible. So to fix that, we're going to double click on it. And in the style section, we're going to be changing the plot from black to white. The main goal of this indicator is to identify the times when the market is overbought or oversold. When the white line crosses inside our green zone, the market is considered overbought. And when the white line crosses into our red zone, the market is considered to be oversold. Okay, now let's learn the exact conditions for entering long and short trades. So the conditions for entering a long trade are as follows. First, the price action must pull back into a level of demand. The candlestick should either touch it or just get really close to it, but it must not cross and close below it. If the price does not respect the demand level, the trade will automatically be cancelled. Second condition, the indicator must print a buy or a strong buy signal. And finally, at the time the signal was issued, the money flow index must be oversold. This means that our white line must be inside our red zone. If all of these conditions are met, a buy order can be placed on the close of our trigger candlestick. The stop loss will be set slightly below our demand level. Now listen carefully. When the price action reaches a risk to reward ratio of 1:1, you're going to be taking half of your position off. Once you've done that, you're going to set the second take profit target for the second half of your position at 4 times the risk. And there we go, the market just triggered our second take profit target. Just quickly, I forgot to mention, if we do hit our first take profit target of 1:1, then we are going to be moving our stop loss up to our break-even level. Here is another example of a really good long entry. We see that our price action bounced off our level of demand, the indicator issued a new buy signal, and our money flow index was in the oversold zone. So we'd be entering our long position on the close of this trigger candlestick, bringing your stop loss there down just below your demand zone, and we're going to be using the same money management strategy. At this point, our stop loss will be moved to our break even as soon as we hit our first take profit target. And we see once again this trade was successful and we managed to return 4 times the risk. Alright, now let's understand the rules for entering a short trade. First, the price action must pull back into our level of supply. The candlestick can either touch it or get really close to it, but it must not cross and close above it. Second, the indicator must issue a sell or a strong sell signal. And at the time the signal is issued, the money flow index must be overbought. This means that our white line must be positioned inside our green zone. So we can open our short position on the close of our trigger candlestick. Our stop loss will be set slightly above our supply zone. And again, when the price action reaches a risk to reward ratio of 1:1, you're going to have to take half of your position off, then move your stop loss to your break-even level, and then you're setting your take profit target for the second half at 4:1 risk to reward ratio. And there's another example of a really nice profitable trade. Let's take a look at one more short example. So here we had the market push up and reject off our supply zone, and the indicator then issued a signal to sell. The money flow index is sitting in our green zone, so it is overbought, and this confirms our entry. So we'd be entering our short position on the close of this trigger candlestick, bringing your stop loss there just up above your supply zone, and once again using the same money management strategy. We see that the market reached our first take profit target, but unfortunately the stop loss on the second half got triggered. Here we have another valid short entry. The market pushed up and reached a new supply zone, and the seller's pressure became very significant. We then had our signal to sell here, and we were positioned in our overbought zone. And again, our stop loss got triggered, but we still managed to make some nice profits. Okay traders, I hope you have understood the rules for this strategy. Now let's do our back testing to find out all the numbers. Okay, the backtesting is complete, and here are the results. So for this strategy, the win rate actually turned out to be 85%. This is top 3 of the most accurate strategies that I have actually tested on this channel, which is very impressive. The total profit and loss was 867%, and the reason that it was so high is because we used our smart money management strategy. We actually managed to find those 100 setups within 4 months. Our profit factor was 11.85, and we had 14 consecutive wins against 3 consecutive losses. So overall, I'm really happy with these results. Definitely give this strategy a try on different time frames and different markets, but make sure you back test it and also forward test it with paper money before trading it live. If you have any questions, please ask them down in the comment section below. If you did enjoy, please leave a like, comment, subscribe, and turn on those notifications so you don't miss out. I love you all. Peace.